Welcome to Finance Frontier AI to make money with 10x opportunities, gold, silver, and AI-powered stocks. Today, we're not just talking about incremental gains, we're diving into opportunities with the potential to completely transform your portfolio. Imagine waking up to see your $10,000 investment multiply to $100,000 overnight. This isn't a dream, but an opportunity you could seize with today's insights. In today's episode, we're bringing you insights on some of the most exciting stocks in the market right now, including Lion One Metals, a company with the potential to deliver explosive growth as its gold production ramps up. And that's just the start of what we've got in store for you today.
Fortune favors the bold, and today's episode is packed with bold investments that could reshape your financial future. From 10x opportunities in gold to high-risk, high-reward plays in silver, we've got everything you need to make strategic moves in today's volatile market. We'll be exploring sectors poised for massive growth, such as AI, gold, and silver, and show you exactly how to position your portfolio for maximum returns.
Exactly. Today, we're going all in on some truly game-changing investments. First up is Lion One Metals, a company sitting on a high-grade gold deposit in Fiji. As they transition from exploration to full-scale production, the upside potential could be massive. We're talking about the potential for 10x returns as they bring their reserves to market. This is definitely a stock you don't want to miss.
And that's just the beginning. We'll also be covering Santa Cruz Silver Mining, which offers a high-risk, high-reward play with potential returns of up to 900%. It's not for the faint of heart, but if you're ready to take calculated risks, it's a stock that could deliver incredible rewards. Additionally, we'll look at Pan American Silver, a more stable investment with a 55% upside, providing a solid foundation for those who prefer security with their growth.
But we're not stopping there. One of the hottest sectors we're diving into today is AI-powered financial compliance. As financial regulations tighten across the globe, businesses are scrambling to stay compliant while reducing costs. This is where AI steps in, completely transforming the compliance space. It's driving efficiency, cutting costs, and opening up huge growth opportunities for those who get in early. With innovation and profit potential, this is an area worth keeping a close eye on.
AI is transforming the way we invest, manage portfolios, and even how we handle regulatory compliance. It's not just about the future. It's happening right now. Whether you're looking for fast growth through gold and silver or want to capitalize on the booming AI sector, today's episode is packed with strategies and insights to help you grow your wealth in today's fast-changing market.
So, whether you're tuning in from your car, your office, or at home, we want you to stick with us. Don't miss out on these high upside opportunities. We've done the research, and now it's time for you to take action. If you're serious about making smart investments that could multiply your returns, then you're in the right place. By the end of this episode, you'll have actionable insights to take your portfolio to the next level.
Don't just sit on the sidelines. Take action now by subscribing on Apple Podcasts, Spotify, or your favorite platform. Staying ahead of the market requires real-time insights, and these exclusive updates could be the game changer you need to boost your next investment. Also, follow us on Twitter for instant updates, breaking news, and behind-the-scenes insights that keep you informed and ahead of the curve. Your support helps us bring even more valuable content to help you grow your wealth every week.
Now, let's dive into some of the key market news driving today's financial landscape. These aren't just headlines, they're opportunities. In this segment, we'll break down how you can capitalize on each of these trends to make money.
News 1. AI-powered stock trading revolution. AI is reshaping the world of stock trading. Platforms like QuantConnect are leading this revolution by using machine learning to make faster and more accurate trade decisions. Traders using these AI-powered systems have reported gains of 5 to 10% monthly. Here's how you can capitalize. Look into AI-based trading platforms for retail investors and explore algorithmic trading ETFs. Investing in the tech behind these systems or incorporating algorithmic tools in your portfolio could provide significant upside in a fast-growing market.
News 2. Hedge funds betting on AI and energy. Hedge funds are aggressively shifting capital into AI and renewable energy stocks. So far this year, hedge funds have outperformed the S&P 500 by 8%, with significant investments in AI technology and green energy. What can you do? Follow the hedge funds. Track their holdings in AI and renewable energy companies through 13F filings. Look for ETFs that focus on renewable energy and AI stocks, which allow you to piggyback on hedge fund strategies. This way, you are investing in the same high-growth areas.
News 3. AI's role in real estate. Predictive analytics. AI is revolutionizing the real estate market by predicting trends and helping investors optimize their portfolios. These predictive analytics are providing investors with unprecedented insights into property pricing and investment timing. Here's how to make money. Consider investing in real estate technology companies that focus on AI, or REITs, real estate investment trusts, that are leveraging AI tools to improve returns. Look for real estate platforms that incorporate AI tools to optimize property investments, offering superior returns to traditional methods.
News 4. AI for commodities trading. AI is now being used to forecast commodity cycles, helping traders manage risks in energy and agricultural markets. With AI forecasting tools, the volatility of commodity prices is decreasing, improving profitability. Actionable insight. Invest in ETFs or stocks that focus on AI-driven commodities trading platforms or companies in the energy sector that use AI for predictive analytics. These tools are enhancing profitability and reducing risk in commodities markets, which translates to better returns for investors.
News 5. Gold prices surge amid global tensions. With geopolitical tensions rising and the Federal Reserve recently cutting interest rates by 0.5%, the dollar is expected to weaken, which will likely strengthen gold and silver prices in the coming weeks. Investors are rushing to gold as a hedge against uncertainty, driving prices higher. Here's how you can profit. Invest in high-quality gold mining stocks like Barrick Gold or ETFs like GLD that track the rising price of gold. With the current global outlook, this could be your opportunity to protect your wealth and see solid returns from gold's upward momentum.
News 6. Silver demand rises with renewables boom. The global demand for silver is accelerating, driven by its essential role in electric vehicles and solar panel production. With the transition to renewable energy picking up pace, silver is set to be a crucial component in these technologies. To capture this opportunity, consider investing in silver mining stocks like Pan American Silver or ETFs such as SLV, which are directly tied to silver prices. As industrial demand continues to rise, particularly from the renewable energy sector, silver remains well-positioned for long-term growth.
News 7. Self-learning AI for stock picking. Platforms like Numerai are demonstrating the power of self-learning AI systems that are consistently outperforming traditional index funds by 12% annually. This innovation is shifting how institutional investors approach stock picking. How to profit? Consider investing in companies that develop AI for financial applications, or look into robo-advisor platforms powered by self-learning AI. These tools are providing better returns than traditional methods, and you can ride the wave by investing in the AI sector.
News 8. AI stock splits and their impact. AI companies like Supermicrocomputer have initiated stock splits to increase liquidity and attract retail investors. These moves make the stocks more accessible and potentially more attractive for individual investors. Your move. Keep an eye on AI companies undergoing stock splits, as these often lead to a price surge due to increased liquidity. Invest early to benefit from the growth potential after a stock split.
News 9. Rising gold prices as a safe haven asset. With the Federal Reserve cutting interest rates by 0.5% and geopolitical tensions mounting, gold is emerging as a critical safe haven asset. Investors are increasingly looking to gold as a hedge against a weakening dollar and economic uncertainty.
News 10. Tesla's AI-driven autopilot expansion. Tesla's full self-driving, FSD, beta is expanding into new markets, including Europe and China. This expansion is expected to boost Tesla's growth, with its stock showing strong performance over the last year. How to profit? Consider investing in Tesla or companies in the autonomous vehicle space that will benefit from advancements in AI. The global expansion of AI-driven autopilot systems could lead to significant growth in the sector. Now that we've explored the big trends shaping today's market, AI, gold, silver, and renewables, it's time to take the next step, turning these trends into actionable investments. We've lined up 4 companies that not only ride these trends, but also offer significant upside potential. Whether you're after explosive growth or steady, reliable returns, there's something here for every kind of investor. Let's dive into the stock analysis, where we'll break down high-risk, high-reward opportunities as well as stable picks that can help you navigate today's volatile market.
Today's stock picks include some exciting names that not only benefit from the current market environment, but also have strong fundamentals to back their growth potential. From the cutting edge of renewable energy to the timeless appeal of precious metals, these companies are positioned to deliver serious returns in the months and years ahead. Let's dive in.
Let's kick things off with Lion One Metals, LIO, which offers one of the most compelling growth opportunities in the gold mining sector. This company could deliver 10x returns. The value lies in its Tavata Gold project in Fiji, where recent drill results have shown gold grades far above industry averages. This means Lion One can produce gold at a much lower cost, boosting profits as they ramp up production. If you're looking for a high upside gold play, Lion One is one to watch.
The political stability in Fiji is another key advantage for Lion One. Unlike mining projects in more volatile regions, Fiji offers a stable and mining-friendly environment. The Tavata project also benefits from being close to key infrastructure, such as roads, ports, and power, which reduces logistical costs. This combination of high-grade gold and low operating costs makes Tavata one of the most compelling projects in the junior mining space.
Another key aspect is scalability. Lion One is doubling its processing capacity, expanding from 300 tons per day to 600 tons per day. This increased capacity will allow the company to scale up its output significantly. As they transition into full production, this expansion could lead to a notable increase in revenues, especially with the continued rise in gold prices.
Financially, Lion One is well positioned. They raised $11 million in a recent funding round, providing them with the necessary capital to develop the Tavata project without taking on excessive debt. For investors, this is a key point because it minimizes the risk of shareholder dilution or debt that could weigh on future profitability.
Lion One also benefits from a strong leadership team led by Walter Barakoff, who has a proven track record in taking mining projects from exploration through to full production. Having a management team with this kind of expertise is crucial, especially as the company scales production.
Recent drilling has also confirmed additional high-grade gold mineralization, increasing the potential size of the resource. This exploration upside means that the Tavata project could be even larger and more profitable than currently expected, offering significant growth potential for the company.
With gold prices trending upwards, driven by inflation concerns and geopolitical instability, companies like Lion One are positioned to benefit. As they ramp up production, we could see a significant re-rating of the stock, meaning early investors could see substantial gains.
To sum up, Lion One Metals offers a compelling opportunity for investors looking for high reward potential. The combination of high-grade gold, scalable production, financial stability, and a strong management team makes this a standout stock. With the potential for a 10x return, Lion One is definitely a company to watch.
Next up is Santa Cruz Silver Mining, SCZ, a high-risk, high-reward opportunity in the silver market. Santa Cruz has the potential for 900% returns based on its silver production growth and the rising demand for silver in renewable energy technologies, especially in solar panels and electric vehicles. The company operates silver mines in Bolivia, with current annual production at 19 million ounces of silver equivalent. Santa Cruz stands out because it's one of the most undervalued silver miners on the market, trading at a price-to-earnings (PE) ratio of just 0.51. Compared to its peers like Pan American Silver and Fortuna Silver Mines, which trade at much higher multiples.
Silver plays a critical role in renewable energy and industrial applications, which means demand is likely to increase significantly in the coming years. As governments push for greener technologies, the need for silver in products like solar panels and batteries for electric vehicles is expected to surge. This makes companies like Santa Cruz Silver well positioned to benefit from this long-term trend. Additionally, Santa Cruz has been streamlining its operations, focusing on its high-yield Bolivian mines like Bolivar and Porco, which are some of the company's most productive assets.
One of the most attractive aspects of Santa Cruz is its exploration potential. The company's Soracaya project in Bolivia has an inferred resource of 35 million ounces of silver, which could significantly boost production as exploration progresses. If silver prices continue to rise, Santa Cruz's production growth combined with additional exploration success could drive massive upside for the stock. Historically, Santa Cruz's stock has traded at around $2.50, and there's a strong case for the stock to return to that level or even higher if silver demand surges.
The company's low valuation provides a margin of safety for investors, but it's important to note that this is still a high-risk play. However, the asymmetric risk profile, where the downside is relatively limited, but the upside could be enormous, makes this a compelling opportunity for those who are comfortable with some level of risk. With silver prices expected to rise, Santa Cruz could easily see its stock price appreciate to over $3.25, a 10x return from its current levels.
Another factor to consider is the silver market itself. Unlike gold, silver has both monetary and industrial uses, which means its price is more sensitive to global economic trends and industrial demand. As industrial demand for silver continues to increase, particularly in the renewable energy sector, Santa Cruz is positioned to capitalize on these trends. The company is already one of the most cost-effective producers in the silver space, which further enhances its ability to deliver strong returns.
To summarize, Santa Cruz Silver offers a unique opportunity for investors looking for exposure to silver in the context of the renewable energy revolution. With 900% upside potential, ongoing exploration success, and a focus on high-quality assets, this stock provides significant leverage to rising silver prices. However, investors should be aware of the risks that come with smaller mining companies like Santa Cruz. For those willing to take the plunge, the rewards could be huge.
Now, let's take a look at Pan American Silver, PAAS, one of the largest silver producers in the world and a more stable investment in the silver market. While it may not offer the extreme upside of some smaller players, Pan American Silver still has a 55% upside due to its large-scale operations, strong balance sheet, and exposure to rising silver demand in technology and renewable energy sectors. Pan American operates a diversified portfolio of mining assets across North and South America, which helps reduce risk and create steady cash flow.
What makes Pan American Silver attractive right now is its exploration and expansion plans. The company has committed to a 360,000-meter drilling program in 2024, focusing on expanding its key projects like La Colorada Skarn and Yacabina. These projects are expected to boost the company's resource base significantly. For example, at La Colorada, silver resources were increased by 69% after recent drilling results, and there's potential for further upgrades as more exploration continues.
From a financial perspective, Pan American is rock solid. The company has over $504 million Canadian dollars in cash and minimal debt, giving them plenty of financial flexibility to fund these expansion projects without taking on additional risk. They also maintain a dividend for shareholders, making this stock appealing for investors looking for both growth and income. The dividend, though modest, adds an extra layer of stability to this investment.
Pan American's production outlook is strong, with operations in Mexico, Peru, Bolivia, and Argentina. They produce silver at a competitive cost, thanks to their large-scale operations, which allows them to maintain profitability even when silver prices are volatile. However, with silver demand expected to rise due to its critical role in electric vehicles, solar panels, and other high-tech applications, Pan American is well positioned to capitalize on this growth.
Another important factor is Pan American's sensitivity to silver prices. As silver prices rise, Pan American stock tends to move in the same direction but with amplified returns. This makes it a great choice for investors looking to benefit from the upward trend in silver prices. Additionally, the company's ability to produce at scale gives it a competitive advantage over smaller players, allowing it to meet growing demand profitably.
To sum it up, Pan American Silver offers a balanced opportunity in the silver space. It combines steady growth from its large-scale operations with exploration upside from ongoing drilling programs. With a 55% upside, strong financials, and a dividend for income-focused investors, Pan American is a solid pick for those looking for a stable yet promising investment in silver.
Now let's turn our attention to Emeren Group Ltd., SOL, a company focused on the rapidly growing solar energy sector. With governments around the world committing to clean energy initiatives, the solar energy industry is booming, and Emeren is well positioned to benefit from this trend. Emeren is involved in the development and management of solar projects across key regions such as Europe and Asia, where demand for solar energy is growing fast. The company is currently trading with an upside potential of 56%, driven by its growing project pipeline and favorable market conditions.
What makes Emeren particularly attractive is its expected 33% year-over-year revenue growth for 2024, with projections reaching $139 million. This kind of growth is being fueled by the global push for clean energy and solar energy's increasing role in electricity generation. Countries are ramping up solar infrastructure investments to meet their climate targets, and Emeren is well placed to capture that growing demand. Their forward PE ratio of about 3 makes them significantly undervalued compared to peers, which suggests there's a lot of room for stock price appreciation as the market catches up.
Emeren's strong financial position further supports their growth strategy. The company maintains a low debt-to-asset ratio of 0.14 and a quick ratio of 2.89, which means they have plenty of liquidity to fund their operations and expansions without needing to take on burdensome debt. This financial strength gives Emeren the flexibility to seize new opportunities in the solar energy space without risking their balance sheet.
Another factor in Emeren's favor is the supportive regulatory environment. Governments across the globe are setting aggressive targets for reducing carbon emissions, and solar energy is a key part of that transition. As these policies create favorable market conditions for solar companies, Emeren is expanding its portfolio of solar projects and securing long-term contracts with utilities, which ensures stable revenue streams moving forward.
Emeren's expansion plans include a focus on both Europe and Asia, where solar adoption is expected to grow the fastest. Europe, in particular, has committed to becoming carbon neutral by 2050, and solar energy will play a major role in achieving that goal. Emeren's strategy of securing large, utility-scale projects in these regions positions them to benefit from this long-term demand.
The potential for 56% stock price appreciation is based on these key factors: solid revenue growth, an undervalued stock, strong financials, and the macro trend of expanding solar energy infrastructure. For investors looking to gain exposure to the renewable energy revolution, Emeren Group offers an exciting opportunity. With its low debt, rapidly growing revenue, and a clear expansion strategy, this stock has the potential to deliver strong returns as solar energy demand accelerates globally.
Lastly, let's dive into Emeren Group Ltd., SOL. This company is positioned in the rapidly growing solar energy sector, presenting a great opportunity for investors looking to profit from the global shift to renewable energy. Emeren develops and manages solar power projects across high-demand markets like Europe and Asia, both of which are aggressively pushing toward renewable energy adoption. With 2024 revenues expected to rise by 33% to about $139 million, Emeren is one of the key players to watch in this space.
Emeren's financial health is a standout feature. The company has a low debt-to-asset ratio of around 0.14 and a quick ratio of almost 3, meaning it can comfortably meet its short-term obligations without relying heavily on debt. This is crucial in the capital-intensive solar sector, where financial stability is key to scaling up projects successfully. With an upside of about 56%, Emeren is undervalued when you consider its growth potential in the global green energy transition.
The solar energy industry is expected to experience massive growth as governments worldwide set ambitious targets for reducing carbon emissions and increasing clean energy usage. Emeren is well positioned to take advantage of this shift, with a growing portfolio of projects in both developed and emerging markets. These projects provide steady revenue through long-term utility contracts, ensuring stable cash flow for years to come.
Emeren's expansion into high-growth regions like Eastern Europe and Southeast Asia is another important factor. These areas are less saturated than markets in Western Europe or the US, which gives Emeren the potential for faster growth and higher margins. As these projects come online, Emeren's revenue and profitability are expected to surge.
Government incentives are also playing a big role in Emeren's growth. Many of the markets where they operate offer strong government support for solar energy projects, further accelerating their growth. The long-term contracts they secure with utilities provide consistent cash flow and reduce risk for investors.
Emeren is currently trading at a P/E ratio of about 3, which shows it's significantly undervalued given its expected growth. With the solar industry poised for exponential growth in the coming decade, Emeren is set to benefit from the global transition toward renewable energy. For investors looking to tap into this sector, Emeren offers a strong opportunity with solid financial backing.
In conclusion, Emeren Group Ltd. is ideally positioned to take advantage of the rapid growth in the solar energy market. With strong financials, a growing portfolio of projects, and the backing of government incentives, the company offers a 56% upside. For investors interested in the renewable energy revolution, Emeren is a compelling option to consider.
Now let's shift gears and talk about a unique business idea that combines cutting-edge technology with financial services: AI-powered financial compliance. As regulations tighten across the globe, financial institutions are under immense pressure to remain compliant while keeping costs low. That's where artificial intelligence, AI, comes in. AI tools can automate many aspects of compliance, drastically reducing the time and costs required to meet regulatory requirements. In fact, some studies show that AI-powered compliance solutions can reduce costs by up to 30 to 40% for financial institutions.
Exactly. In today's financial landscape, compliance is becoming more complex and time-consuming, especially with the introduction of new regulations like GDPR in Europe, CCPA in California, and stricter anti-money laundering (AML) requirements. By automating processes such as transaction monitoring, KYC, know your customer, and fraud detection, AI can help companies stay ahead of compliance challenges. This not only reduces costs, but also mitigates the risk of penalties, which can run into millions of dollars for non-compliance.
And the opportunities aren't just for large financial institutions. Smaller businesses, particularly fintech startups, are also leveraging AI to handle their compliance processes. AI-powered compliance platforms, such as Onfido and ComplyAdvantage, are already transforming how companies manage regulatory requirements. The potential to provide AI-powered compliance consulting services or develop custom software solutions for financial institutions is a growing market that offers significant upside.
What makes this space even more attractive is that it's scalable. Once an AI platform is developed, it can be deployed across various industries and markets with minimal adjustments. For instance, a company might initially build an AI compliance tool for the financial sector but could easily adapt it to other highly regulated industries, such as healthcare, insurance, or pharmaceuticals, where compliance is equally critical. The scalability of AI-driven solutions offers a huge growth opportunity for businesses entering this space.
The key to success in this market is not just developing the technology, but ensuring that it can integrate seamlessly with existing systems in highly regulated environments. Compliance isn't something companies can afford to take lightly, so trust and accuracy are paramount. Any AI solution that offers a high level of accuracy in fraud detection, automated reporting, and comprehensive risk management has the potential to scale quickly and dominate the market.
Let's talk numbers. The global market for regulatory technology, RegTech, which includes AI-powered compliance solutions, is expected to grow from $7 billion in 2020 to nearly $21 billion by 2027, according to market research. This rapid growth is driven by the increasing complexity of regulations, the rise in digital transactions, and the need for companies to automate to remain competitive.
Exactly. The return on investment ROI for AI-powered compliance solutions can be enormous, particularly when you consider the cost savings, increased efficiency, and reduced risk of fines. In an environment where companies face multi-million-dollar penalties for non-compliance, having a robust AI-driven system in place can be a game changer. Whether you're a startup building custom compliance software or an established company looking to implement these solutions, the opportunities are significant.
To summarize, the AI-powered compliance space is a fast-growing market with enormous potential for consulting, software development, and platform integration. By automating complex regulatory tasks, companies can cut costs and mitigate risks, while positioning themselves at the forefront of a tech-driven revolution in the financial services industry. For investors or entrepreneurs looking to break into a high-growth sector, this is a space to watch. As we wrap up today's episode, let's quickly revisit the key takeaways from everything we've discussed. We've explored some major trends and opportunities, from high-potential stocks like Lion One Metals, Santa Cruz Silver Mining, Pan American Silver, and Emeren Group, to an exciting AI-powered financial compliance business idea. These opportunities span various sectors, including precious metals, renewable energy, and financial technology, offering upside for every kind of investor.
Exactly. Whether you're looking to capitalize on the gold market with Lion One's 10x potential, ride the renewable energy wave with Emeren, or gain exposure to the growing demand for silver in the renewable energy sector with Santa Cruz and Pan American Silver, today's episode has given you actionable insights that could shape your financial future. And let's not forget about the AI-powered financial compliance market, which is growing rapidly as companies adopt more advanced tools to manage increasingly complex regulations.
Now, before we close, let's take a couple of listener questions that were sent in during the week. The first one is from Jake in Austin, Texas, who asks, with so many opportunities, how do I decide whether to focus more on AI or precious metals for my portfolio? That's a great question, Jake. It really depends on your risk tolerance and investment horizon. AI is a high-growth, high-reward sector, but it can be volatile in the short term. On the other hand, precious metals like gold and silver offer stability, especially in uncertain markets, with companies like Lion One and Santa Cruz providing both high upside and a hedge against market risk.
Our second question comes from Emily in San Francisco, California, who asks, what's the best way to stay informed about the market changes that could impact these stocks? Fantastic question, Emily. Staying informed is critical. Make sure you're following market trends and news related to the sectors you're invested in. Subscribing to podcasts like ours is a great way to stay ahead. Also, following financial news platforms, and even setting up alerts for specific stocks or industries you're interested in, can help you make timely decisions.
Ready to take your next step? Stay ahead of the curve and ensure your portfolio benefits from the latest market trends. Subscribe to us on Apple Podcasts, Spotify, or wherever you get your podcasts. By staying informed, you'll gain access to strategies that could transform your financial future. Don't miss out on high upside opportunities in precious metals, renewable energy, and financial tech. We'll bring you the insights you need to grow your wealth.
And don't forget to follow us on Twitter for real-time updates, breaking news, and insights that can help you make smarter investment decisions. By subscribing and following along, you're not just staying informed, you're getting ahead of the curve. With the fast-paced nature of today's market, having timely information can make all the difference.
Remember, in investing, staying strategic and proactive is key. Markets move quickly, but the opportunities are out there for those who are prepared. Until next time, keep investing wisely and stay tuned for more episodes where we'll dive deeper into sectors and stocks that could reshape your portfolio. Before we close out, a quick reminder, the financial information we've discussed today is based on market conditions at the time of recording and reflects our research and opinions. It's important to always do your own research and consult with a financial advisor before making any investment decisions. Markets are dynamic, and past performance is never a guarantee of future results.
Also, please note that any specific stock or business ideas we mention today are for informational purposes only and should not be considered direct financial advice. We encourage you to explore these opportunities, but to also weigh them against your personal financial goals and risk tolerance.
As for the music you've heard in this episode, it's licensed under standard agreements. A special thanks to Vibe Tracks for the track Crystal, provided under the YouTube Audio Library license. This track is available for use in your projects without attribution under that license.
That's it for today's episode. Thanks again for tuning in, and we hope to see you next time on Finance Frontier AI Make Money. Don't forget to subscribe and follow us for more actionable investment strategies and insights.